Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Wednesday, October 2nd, 2019. So a little after 12:30 Eastern Time as I'm starting this video, and wanted to share some trade ideas. I did a video earlier, and again, by all accounts, these sell signals are about as good as they get now. A lot of the criteria I talk about, what you want to see with a breakdown, an impulsive move, not just a limp intraday. Remember, we had a few false breakouts. So you had a gap down, which in itself is impulsive, followed through back into the trading ranges, well within the trading ranges. And as I had said in recent videos, if you recall, I said once we got into that, if SPY entered that, which it dipped below yesterday, the selling would begin to accelerate, and that's what's happened here. So just a quick takeaway, if you're new to trading, investing, look, number one, anything can happen, but I'm just going to share my thoughts. I've done this for many years now. This is a time that you want to sit tight and be patient. If you have already came into the day with shorts, or you added some shorts today, anything's possible. We're at that 200-day moving average now, so I'd expect at least some reaction there. Reaction could be a consolidation where we just pause on that level, or a bounce. And we'll see how the week finishes. Again, my thoughts on kind of what to watch for, look for this week, were in that video earlier. What I want to do now is share some trade ideas with you guys. This is an alert console I have on this TC2000 charting program, and you can see here today we had, and I'm going to go over the trade ideas. SPY broke down. You can see I had an alert set for trendline alert to break on to trigger if this trendline broke, which it clearly did. So you can see right at the open, shortly after the open today, that alert fired off. And remember the other day I gave you guys trend lines on these XLK, the big things I'm watching to confirm a breakdown in the market. Tech, which again, that triggered the other day, but I told you during that day, look, we're close, we're right on the line. It dipped intraday and then managed to close back below. So today it's a solid breakdown. I said I wanted to see the leader. This had been the strongest stock. I know Apple just punched a new high, but Microsoft by far has been the strongest and most resilient stock in the market-leading FAME stocks, FAAMG. Apple, here I'll go off topic for a second, but because I'm sure people want to know about this stock. It did make a marginal new high, but Apple's been rocky lately, and it's still off the all-time high. So again, Microsoft was recently trading at a new all-time high. Apple, like many stocks, peaked back in 2018, and so far has failed to take out that previous high. And right now, and this is a trade ID, even though I didn't have an alert yet go off, you can see we're right at the uptrend line. So forget about every other line you see on this chart. I'll show you what stands out to me right now is this uptrend line, and that's the trend line. I have it slightly under the lows on the 24th, but it comes in and captures all these other candles real nice and clean, right, starting here, and close enough on that one. And then this is my divergence line. That gives us a divergent high, negative divergence, meaning your indicators are making equal or lower highs as the stock has gone on and made higher highs. That's negative divergence. And it's a big part of my trading style. Wash, rinse, repeat. Look for these divergent highs, and look for divergent lows to go long, like we had here. So watch, rinse, repeat. These are the big trends. Focus out. I post all kinds of analysis, intraday stuff, day trading, long-term. This is swing trading stuff. If you're a swing trader, this is a time frame you really want to focus most of your efforts on, the daily chart here. And if you can be patient, wait for the right setups, you can swing these trends. And again, it's not magic. They were all in advance. This isn't hindsight stuff. Before they even put them in, and after at the time, marked with divergent highs, divergent lows. Long entries were posted back here on Apple, and short entries here, and that's it. So we have the next sell signal. Now I will say this, yes, a break of the trend line's bearish. Yes, I think it's going to happen. It's almost inevitable at this point with the breakdown in the markets, unless the markets happen to recover. Why? Because it doesn't matter how good the fundamentals are in Apple, how bullish people are, how many iPhones they sell. It is a top component of both the S&P 500 and the NASDAQ 100. And when the algos turn to the sell side, when they hit the sell button, meaning the algorithmic trading programs, high frequency trading, just investors in general spooked right now. If this market closes down, they're going to start, CNBC will start talking about what happened last October, and probably you'll hear mentions of Black Monday and all kinds of other things, and that'll spook investors, and then they sell. And when they sell, if they sell their S&P 500 index fund and their 401k or SPY or QQQ, those fund companies and the ETF companies have to redeem and give them the cash. And like you or I, if you buy a stock today, you have to pay for it at settlement. You have a few days to pay before that money's swept out of your account. So same thing happens there. So basically it's called forced redemptions. When the market moves down, you get liquidations, and the selling begets further selling. Now, with all that being said, Apple, you want to play it safe. It has pretty good support here, about 216.41. That was a recent breakout right here. It had failed several times at that level. So that would be your safe bet, to wait for that 241. It was, let's see back here, the stock popped 241, remained above it, and once that breakout clearly failed, boom, big old bull trap. Came up again, failed. Came up again, failed. 2 corrections. Broke out this time. And if it fails again, it's going to be a wash, rinse, repeat scenario. It'll be another bull trap, fail, break out to new highs, and you'll probably see something similar along the lines of anywhere from, this, possibly this, or even possibly even worse. We'll see. So that's your, like I said, why short it here if you're not already short on the break of the trend line, when you can just wait till 216.41 goes impulsively, especially a daily close. Targets, I didn't really have targets marked up. You can see levels on this chart, but I would say with the sell signals in the market, just tuck it away for now, and I'll do an update later if it starts to pan out. If these breakouts or breakdowns stick by the end of the week, I'll certainly do an update on Apple for you guys. All right, back to the other ones here. So SPY broke down, and I already showed you the other day, the day I gave you guys those levels to watch and told you some price alerts. That was just or late last week on the 27th. Remember, Microsoft and XLK and QQQ all broke those trend lines intraday, but today is the real deal. So I didn't reset the alerts. That's why you have them there. I was just watching these closely, and so you can see all look good. All right, other trade ideas that I haven't covered. Starbucks. I may have posted some or all of these possibly in the trading room. Starbucks first broke down here below this minor uptrend line, put in a divergent high. Here, let's get this guy out of the way. Divergent high right here. You can see the negative divergence spanning for quite a while. And just today, or yesterday, I had, gave me the alert today. For some reason, the stock broke down. Oh, I must have had it on the 60-minute chart, another trend line or something there. Let's see if I did. I have a lot of different boards. I may have had an alert. Either way, it doesn't matter. The stock broke down and appears to be headed lower. You can see my targets. If you're new to the site, please know that I share 2 types of trade ideas: official, unofficial. When the market gets busy and things are changing, and lately I've been trying to keep my head above water, answering questions on the from the help, contact form, questions in the trading room under the front page post, and of course managing my own trades. I'm in and out of NQ, QQQ, SP, all the things I'm trading very actively: gold, long, short. And so what I'm getting at is the official trade ideas when the market's moving very fast, maybe light, but if I tell you I like something, I like it, and that's where I think it's going. And this is the case with Starbucks. It broke down yesterday, and now that the market's broke down today, the chances of this breakdown sticking, in other words, not proving to be a false breakdown, meaning we whip back up, have gone up. So, like I said, a few more things to put the nail in the coffin on the market, but I see Starbucks coming down here. That's about $75. Oh, where I was going is official trades. I always take the time, and it takes quite a bit of time to do that, to give you what I call adjusted price targets, suggested stop, beta adjusted position sizes. Unofficial trades, I kind of throw them out there. 99% of the trade ideas I share on the site are unofficial. It's just easier for me to get these out. I may or may not follow up with unofficial trades. As always, if you're a member of the site, just bump me. If you're a silver member, just below this post, any stock that I mention in a post or a video is fair game for questions in that comment form, under the comments below. So I'll try to monitor this one for the next week or so. And if you have questions on Starbucks or any other stocks I cover, just post them there. Of course, gold members can also post questions in the trading room on anything I've covered or haven't covered, anything you have. And again, I'll do my best to keep up with those, and probably work over the weekend to catch up this week. All right, T1, and then favor bounce down to T2 at least. That's be about the $69 area. And oh, I think I know where that alert, yeah, here's where that alert fired off. I knew I was missing it somewhere. Weekly chart. Wash, rinse, repeat. You probably put another trend line right here. You can see these uptrend lines. Starbucks is in a secular bull market. Make no mistake about it. But these are, corrections within the bull market, and they're pretty big. Don't look like much on a weekly chart here. That's a 30% drop. I'm sure this one's got to be 15, 16%. There was a little mini flash crash that happened in 2015. I mean, almost 30% drop in the stock, and boom, this is a breakdown of the weekly trend line. We haven't closed the week yet, so you'll watch this. But if we close that, this tells me to position for a longer-term swing trade, not just a quick pullback trade. A breakdown on the weekly chart has now broken this uptrend line, and very overbought. Just like we were overbought, this is RSI. Anything 70 or level, the 70 level or higher, the red line, is typically considered overbought, although some stocks become much more overbought than others. So what I like to do is, I'll look at the 70 level, because a lot of traders do, but in each individual stock, if I see one that tends to become much more overbought, I put a line there. So on Starbucks, here's a line that pretty much capped most of those advances. And so for Starbucks, this is its own unique overbought level, around 81, almost $82. And if you wait for that and you go back in time, again, we're looking at a decade of price history here. Just look what happened to the stock at that point when it hit that level. Right there. Came maybe a little shy right there, hit it right here, hit it right here. And that was that 30-something% drop. Went on to put a divergent high, by the way. This secondary high was a divergent high. And then we hit it here recently for the first time. So, if history repeats, we're looking at probably a double-digit drop in Starbucks. And then there's my targets. Minimum, initial targets here on the daily time frame. I might extend those targets depending on what happens going forward. All right, don't want to spend too much time on any one stock, but let's go to the next one. HIG. I had actually set this one up. I was going to add it as an official trade. I've been waiting for the market to break. Official, unofficial, I like it. And this is HIG, Hartford Insurance Group. It broke down yesterday, but again, with the markets just sitting on that support, a SPY close enough on top of 294 yesterday, needed the nail in the coffin, which I think we've got today. And at least from this chart, whether the market bounces or not, that's an ugly breakdown. This is everything you want to see on a breakdown of a trend line like this. This is the trend line here, the lowermost trend line. You want to see impulsive move, and that is impulsive selling. You have the divergent high that tells me that we'll probably come down to this first target zone at least, and ultimately probably work our way down here to that second target zone around 50. Remember, shorting individual stocks, you have more bang for your buck than the broad market, because broad market has the S&P 500, for example, 500 companies in 11 different sectors. Some of those sectors are defensive stocks, some of those high dividend paying stocks, things that people flock to during times of market volatility. But the downside to individual stocks is any news headlines that can come out. You have to navigate earnings reports every quarter, things like that, and you can have a pretty big gap against your position. An individual stock can gap double digits in either direction, whereas a stock market's not going to gap double digits in either direction. So you pick your poison. If you're not comfortable with individual stocks, stick with the broad market ETFs or sector ETFs. You have that diversification there. Not to say that they're safe, but they're quote-unquote safer than trading individual stocks. So there's HIG. Did I give you the percentage terms? Yeah, 13 or so percent to that second target, about another 5.5% to that first target there. Next one up was ALB. That triggered, I mentioned this one yesterday, is popping but not. Here's an example. When you have a price alert go off, and I covered this stock in a video yesterday, it wasn't impulsive and we failed right back below it. So that's what we call a whipsaw signal, and because it was not impulsive and there was no follow through, it really didn't give you a buy signal there. That's why I'll set these alerts, but I don't blindly take them on the breakouts. And there's a little support right there. That's it's a chemical stock, but they do a lot of lithium stuff with lithium. And next one, AIG, another insurance company. Impulsive breakdown yesterday below the trend line. Follow through today. First target, second target, third target. Oh, if you see it T1 equals versus HIG, what I was getting at before. Unofficial trade ideas, I give you the actual support level. When I do an official trade, see, I was prepping AIG as an official trade the other day, and I was getting ready to do Hartford too. What I'll do is I make an adjustment. So when you notice on the official trades T1 equals, T2 equals, that is set actual a little bit above the actual support level that I expect a reversal on. In this case, 51.79 at T1, 49.66, and I do that to help minimize the chances of missing a fill, because if all buyers are looking at that level, I think it's a well-defined level. The shorts might cover early, the buyers might step in early, you have the 200 day there. So I'd rather not try to eke out the very last 2 or 3 pennies on the trade and miss a reversal or chance getting caught in a reversal. So that's the difference on the trade ideas. And so if you see an unofficial trade, just keep in mind, best to on shorts cover a little bit above the actual support level I'm highlighting, and on longs vice versa, you're going to sell a little shy of the resistance. On AIG, I mean, just a beautiful looking chart. You see this downtrend line it comes in? So you had a rejection off the downtrend line, false breakout, negative divergence. I think I was showing you on the daily chart. Yeah, negative divergence right there. So aka divergent high, little whipsaw. And this is what I was talking about earlier today in the video. Remember with the stock market, that's why I wanted to see a little more evidence. We've seen an unusual amount of whipsaw signals over the last month or so. They got us on got me on a couple of the official trades, you know, the TVIX and QQQ official trade, and even SOX before. But you know, I never waffled or wavered on my views that the technicals hadn't changed. That was just you know, false breakdowns, whipsaw signals in a lot of stocks and the indexes, but these look like the real deal. And sometimes you get a whipsaw signal and the charts will change, the technicals, but in this case, this chart only got more bearish when it put in a marginal new high. Failed breakout of that downtrend line as well. That's very bearish to see a false breakout or a breakout that failed. Also a reversal right off this resistance level here at 58.50. You can see that goes to the left of the chart. A lot of reactions back here. So just, you know, so much information in these charts. And that's why I like to do the videos. I know they're long and, you know, take a while to listen to during the day, but I've been doing a good job of getting individual charts out to you guys too in the mornings and during the day as well. All right, next one up, let's look at well, I already covered XLK, MFs, Microsoft, QQQ the other day. DGAS, we had an official trade. I had a couple buy signals on that recently. That's the short nat gas. ETN, Bitcoin, I told you right here, Bitcoin broke. That was that big level right here. This was comparable to that level on the futures, the 12, 22, and so far it's been, did I get my 25% drop? Was it 25% I was calling for about a month ago? 20, yeah, right there, about on the pop-up box to the left, 20 was 24.61 or so. So yeah, pretty much and that was my minimum target, guys. I think Bitcoin is going lower. I think Bitcoin's in a bubble. Was a bubble, I'm sorry. Was a bubble, and as I did in that video from back a month or so ago, you know, pretty much figured it's in the first major, that was the first major bear market rally wave, with the next one to come. You've got Microsoft and Visa backing out now. They were on board with Facebook's new planned cryptocurrency thing. And as I've been saying, one reason I've been bearish on Bitcoin is the powers that be. You know, this whole world is run on the banking system. You guys know, I mean, everyone pretty much knows that. And, you know, there's some powerful government forces involved. They can't risk the central banking system collapsing and having alternative currency. So as I've been saying, the powers that be, meaning governments, will not allow replacement to the euro and the dollar and all that. They're going to fight it as best they can, and that's why MasterCard and Visa were pressured, and that's why they now just announced the other day they backed off. You know, they were going to back in and go in with Facebook on that. And the latest headline I saw said they're now reneging due to pressure that they're getting on that. So again, it's, I don't know, pretty fundamentally makes sense to me, but we'll see. I'll see where this one goes. There's certainly support coming up here at 882 right there, so there might be a bounce trade to be made. All right, I think that's it. Oh, I wanted to cover this one I mentioned a few weeks back. This one broke down. I mentioned it was a short trade idea. Intuit. beautiful bearish rising wedge pattern. Breakdown, first target was hit, 261.66, and this is why I list multiple targets. An active trader can either game a bounce off the initial tag of a first target right there. That's when we hit 261.66. Or you can reverse, go long, and then go short again on the bounce, or a swing trader might want to just hold off, and then the next objective entry is when the support breaks, which is today. So now we've broken my first target, 261.66, which is support. It's where I expected a reaction, and that's every bit of a reaction. It's both definitions. I say a bounce and or consolidation. That's exactly both of those. We could bounce and consolidated off that level after hitting it for a couple weeks, and now we broke down. This opens the door for a relatively swift, relative, meaning, it might not be straight down, it could be down to my next target at 239.73. And while the optimal entry would have been a little bit earlier today, that still gives you from where we're at about another 6% or so downside, and possibly more. This is just a daily chart. Here's the last time we broke a comparable wedge. See, this is how it works. It's not always a straight shot down, and you're going to bounce on these support levels. Buyers are going to step in. Shorts are going to cover. So as a swing trader, you can either look at the big picture and say, you know what, I'm going to ride this out. I'm going to go for the big prize. And the big prize here, at least initially, would be this target here. And, if things get ugly in the stock market, I'll tell you right now where I think Intuit's going over the next depends on what happens if we get those confirmed sell signals in the broad market, or we rally up soon, go to a marginal new high. If we get some solid sell signals in the market's topped, then this could happen in just a matter of a couple months here. A move down to this primary trend line. I'm talking the trend line that comes all the way off the late 2008 lows. That's over a decade-long uptrend line right there and into it. And that is a likely target, and that would be, I'm trying to grab this candle, I'll tell you exactly how much downside if you're, again, willing to ride out the zigs and zags. That comes in with that 197.42 target. That could be there. That's about a month and a half, a little less than that, and that's about a 23% drop. And the way I expect it to play out would be something along these lines. Come in here. And again, it depends if and when we get there. That trend line will be the first support level. We may overshoot it intra-week, wouldn't surprise me, and then recover it because we have some decent support there around 197. And look, if that breaks, there's your bull market uptrend line. So maybe a bounce there, maybe not. If it breaks, that has longer-term bearish implications. So this is just my initial swing target right here, and we'll see where we go from there. Again, let's not get too far ahead of ourselves. I just wanted to say that the weekly charts will help formulate where I will target on the daily charts, depending on what's going on there. And now that we have a breakdown on the weekly chart, this puts Intuit in a short the rips, cover the dips mode, kind of like a bull market in reverse, where instead of buying the dips and selling the rips, you want to cover the the sell-offs, the dips down, and then short on bounces back into resistance. I think that's pretty much it. There's a couple others I had alerts on. PAGS, I don't know if I covered this. This is a nice looking chart here, a bearish chart, not nice looking for the bulls. Let me cover this one before I move on. Okay, so what do you see? You see the divergent high, right? There's your divergent high 1, inched up, made a marginal new divergent high, took out this trend line, and boom, fall right to that 43.27 target, bounce, back tested the trend line. Like I said, so much there in that chart, and then move down. So that's one view. Let's take another look at this. Let's do it this way. Let's take away those lines, and I think you may be seeing what I see now, and if not, this is what I look at when I see a chart. I see a left shoulder, a head, really, double head or one head, doesn't matter. You can have a double-headed, double shoulder pattern, but this is a nice looking head and shoulders topping pattern. Very nice. This is your neckline. And if you're not familiar with these patterns as I talk about them, do a Google search. Head and shoulders pattern, you'll find a million hits. and most of them will say the same thing. Some will be a little bit different, but you can have a flat neckline, an upward or downward sloping neckline. Either way, the one thing that most will agree on is that you will have the measured target for the pattern is the distance from the head down to the neckline added to where the pattern breaks down. So while you can see I have a trend line coming in here, so this is how I would expect this one to play out. You get a sell signal on a little more downside today if the market dumps. Probably get a little reaction off this trend line and then continue lower. And although I had the measured target was here, I don't see a lot stopping this stock to right here. So I don't go off measured targets. I'll use them as a rough guide because that's all they are, as an estimate. I don't see a lot of support right there where the measured target comes in. So therefore, I would continue to ride this one down until about that $32 level, and that's PAGS. And I think there's just one more. Well, this one already triggered a while ago. That's on the lead. I had you can see on, when was that? September 9th right here, the breakout of this bullish falling wedge pattern. And actually, no, it was, yeah, we got the breakout right there before the gap. That was a nice entry. And from there, that one rallied about 12%. But not that, I'm no longer interested in this one right now. It was long. I just wanted, it was on my, those are the last 30 days, by the way, the alerts that I had on the last 30 days, at least on this charting platform. All right, let me wrap it up here. That's a couple trade ideas. Let me see if there's anything else I want to cover. No, that's it. I have a whole bunch of a scratch pad of dozens and dozens of trade ideas, so we'll see what happens with the market today. And the nice thing about when you get these pretty impulsive sell-offs and breakdowns, I just I'll tell you, it's sometimes easier, and I find it certainly more efficient and manageable to just press the indexes hard. In other words, leverage up. If we get some additional sell signals, as far as, you can short a dozen or so individual stocks, and like I said, typically more bang for your buck on those, or you can just short QQQ, SPY, any of the leverage ETFs or the futures, and then not have to worry about individual earnings and other things like that. All right, we'll wrap it up here, and like I said, I'll follow up with some additional trade ideas, and if you want any of these charts, just bump me in the comment section below the post, and I'll be glad to share those charts for you. This has been Randy Finney with Right Side of the Chart.